Hi, my name is Kunal, and welcome to the Geeks of the Valley podcast, which connects with some of the brightest minds globally who are leading their respective industries today to discuss the hottest upcoming industry trends and how their work is affecting the global economy. This morning from Bogota, Colombia, we have the ex-COO of Milo.com, which was acquired by eBay in December of 2010, and current founder and CEO of Polymath Ventures joining us. Please welcome Wenyi Cai. Wenyi, thank you so much for joining us today.
Very happy to be here, Kunal.
And how are things with you in light of COVID and in Colombia?
Well, today we're actually in the middle of some quarantines here in the city, but hopefully that won't last very long. It's just for the weekend.
Yeah, I hear Latin America is getting hit pretty bad as a whole.
Well, I mean, as with most of the world, you have these different waves. So after Holy Week, which is a big holiday week here in Latin America, definitely the curve went up. So we're trying our best to control it. But at least this time around, this year, the governments have learned that they cannot close the economies completely. So, they're trying to deal with it in a rational way. So let's see what happens.
That is interesting. Let's jump into the first question here, shall we?
Of course.
So, Wenyi, tell me about yourself and your background, and really what brought you from the Valley to South America to start one of the largest venture builders in, almost really all of South America here.
Great. Yeah, so maybe to explain the jump from the Valley to coming to Latin America, I need to go back a little bit, right? So I was born in China. I grew up between China and the US in my childhood. And really, I think that was an important contrast and formative experience to see the differences, to experience the two very different cultures. And so that opened my eyes to not only being very interested around the world, being very interested in different cultures, different economies, different political structures, but particularly around the question of economic development. So everybody's aware of the enormous transformation that has happened in China since the 80s. And I think that I was born in the 80s in China and really witnessed that, both living there as well as going back frequently, even after we moved to the US. So it was always a very important question for me around why are countries poor? How do they grow? How do people become middle class? How do you move from middle class to developed? And so that's always something that's fascinated me from childhood. And now academically, I studied physics and philosophy at Harvard, so quite theoretical, but still asking big questions, right? Trying to understand what's the meaning in the universe. And then after my physics career, I did a lot of experimental physics when I was younger, but I really kind of accidentally got into business. And initially started out as a quant trader, building algorithms and trading strategies, and then ended up joining McKinsey, which took me to. I was based in the Dubai office, and I worked all across the Middle East, Africa, and South Asia. So I think McKinsey was very formative in not only kind of understanding China and the US, but really working in lots of different middle or lower middle income countries on three continents. And I think that deepened both my interest as well as my knowledge of, okay, how are these economies structured? What types of industries are making big transformations? When I worked for McKinsey, it was in the mid 2000s, and 2G edge was getting rolled out all across the region in Africa, and I saw great transformations happen in the economy, in the labor market, in the way that people even built businesses on top of that that infrastructure. So I think I was able to witness very profitable businesses get built that were incredibly transformative to the society. And so that was very inspirational to me and exciting. And that deepened my interest in emerging markets in general and kind of widened my horizons beyond the US-China contrast, right? And afterwards, I went back to the US. I went to Silicon Valley. I was convinced, this is back in 2009, I was very convinced that technology, especially this wave of technology, was going to transform the world, and ended up joining an early stage team at Milo.com, and we were doing local product search, so very early days of omni-channel retail, and I was the COO there, and looked after a lot of product, but also the business development side. So I think that going back to the US and going to Silicon Valley was kind of based on this thesis that technology and the way that Silicon Valley was building companies was going to be really transformative for the world, and I wanted to learn from that. So I was there. We ended up, Milo was a fast ride. We ended up selling the company to eBay after doing a very interesting partnership with them, and for me, I think I really couldn't forget about what I had seen with McKinsey in the different markets I had been working in previous to being back in the US and kind of getting caught up in everything that the Valley is. And I think for me, I had made the connection. I had connected the dots around, I care about economic development. I've always done it or seen it happen from the private sector perspective. And there was this whole suite of technologies, not only technologies, but like I would call them business technologies around how, lean startup, how do startups work? How do you raise venture capital? How do you think about talent? How do you kind of form these teams and so forth? And so I felt that the technology side, as well as the methodology side that I had learned or at least been exposed to in my days in the Valley, were going to be incredible tools to utilize and to leverage in kind of doing economic development from a private sector perspective in a more transformative way than had been done before. So that's a lot around my background, but I think at least, you can kind of see the connections. And in terms of why Latin America, right? So I really did a global analysis and looked at, okay, if you look at all the emerging markets, what's the total GDP size? What is the size of the middle class, tertiary education levels, level of regional integration? And actually Latin America ranks really high. Latin America has the most number of middle class in the world in developing markets besides China. So China, really we're talking about, in China, in terms of middle class population, we're talking about something like 700 million, right? And Latin America is probably around 300 million. So it's very substantial in size. And after Latin America, you have to go down quite a bit. It's in terms of Middle East, North Africa, or Southeast Asia, or South Asia. Those numbers are usually a fraction of Latin America. So that and curiosity, I guess, brought me to the region. And I've been here and building here for a while now.
So Wenyi, you then basically, as you mentioned, started Polymath. And Polymath, if I'm not wrong, stands for a person of wide-ranging knowledge or learning. Can you tell us more about this? How did you kind of come up with this name? Was it basically for this reason?
Yes, I have personally, right? I've always been very interested in the sciences, in the arts, and of course, then later on, and business and so forth. So I think somebody with a lot of curiosity and is able to engage in many subjects is someone. I'm not saying that I'm a polymath, but it's certainly an ethos that I really admire and respect. And one of my formative experiences was when I was at Harvard. I actually started a general interest magazine, and because everybody was kind of doing it part-time, right? It was an extracurricular activity, and because it was general interest, so you had nonfiction, you had fiction, we published art, and so forth, and so we ended up getting really interesting people. So everybody was, studying physics, but a poet, or studying philosophy, but actually was an amazing, programmer. And so we ended up getting a lot of these hybrid thinkers on the team. And it was fascinating to me the way that different hybrid thinkers would then interact with each other as a team. So since I was very young, I've been very interested in multidisciplinary teams, and especially multidisciplinary teams that of people who were in of themselves quite multidisciplinary or hybrid thinkers or polymaths, as you say. So that's a kind of talent and organizational interest and experience and fascination I've had leading many different things, not actually polymath ventures. And as I learned more about entrepreneurial methodologies and, for example, design thinking, I realized a lot of my intuitions were mirrored in those methodologies. And so if you think about what we do, which is systematically create companies across many different functions and needs and industries, you kind of need a group of very curious as well as multidisciplinary, multifunctional talent to make that happen, right? So it's a fitting name for what we actually do.
And to dive a bit deeper into Polymath Ventures, how is your venture building model structured? So, in other words, if I were an individual who wanted to work for Polymath or with them as a startup, what would the process look like from beginning to end?
Right. So so some people might have heard of venture studios at this point. The earliest one was started by Bill Gross Idea Lab in the late 90s. And today, I would say the venture studio movement is quite global, and it's gaining a lot of momentum. So at last count, we're at over 600 venture studios around the world, and we've probably missed some in that count, right? So it's very interesting. And what differentiates a venture studio from, let's say, an early stage venture capital firm is studios are builders, right? So it's not that they don't invest, they usually do invest some capital, but it's about building, like generating the ideas in-house somehow, and then having a structure to validate and to launch those ventures in a systematic way, and hopefully with a much higher success rate. So in terms of Polymath itself, there's a bunch of different archetypes under the venture studio umbrella model, and Polymath fits into what is considered a co-founder type of archetype. And what that means is we are very deeply engaged for a pretty long period of time. So we're not doing kind of cohorts of, a dozen different companies at a time. We're actually building, a handful of startups maximum at a time, right? So if you think about our process, the part that we are the most engaged is the first 18 months. So we will go through a 3-month ideation process, a 3-month roughly validation, and then 12 months of what we call product market fit. So that 18 months is basically before raising an external Series seed. And the reason I say external is prior to that, it's completely funded by the studio. So during that time, Polymath is full-time involved. So in the ideation process, we usually have a team of 4 to 5 people full-time investigating a particular challenge or a particular problem that we want to get deeper into, right? And so we use quite a bit of ethnographic research, design thinking to understand user needs. We end up using that research and synthesizing it into insights. And from those insights, probably generating 600, 700 ideas, and then winnowing that back down to 8, of which maybe 3 or 4 we prototype, and then we end up with one winning model by the end of that 3 months. And at that point, we've done a lot of research. Besides the actual prototyping with users, we've looked a lot at the business model, at what's been happening at a global level related to the industry. And so we have a pretty deep understanding of the business side as well. And then in the validation stage is when we build the minimum viable product. And usually actually in that stage, I would say we have a couple cycles of minimum viable products, because very often you don't get it right the first time you build it. And our who becomes our co-founders, right, for these ventures? So we have 2 main sources of co-founders. They either come from, we have an internal business design team, which is multidisciplinary, but a lot of times the co-founders will come out of the business design team because they were the ones working on the idea from the beginning, and they say, well, this is too good to give up. I'm just going to jump in and I want to be a co-founder of this business. The other route is we often bring these entrepreneurs in residence. And I think these people are usually a little bit more senior. Maybe this is like, they've already done a startup before, and they're thinking about the next step, and they join somewhere in the first 6 months of us investigating this space and validating it, and they're ready to jump in and lead the venture, right? So the first 18 months is kind of we have full-time people on the team. We're deeply involved in the design, validation, and kind of iteration to get that to the initial product market fit. So that's kind of the first stage of our involvement. Between raising the Series Seed and the Series A, which could be somewhere between a year to 2 years, we are no longer the ones running the business. We need the founders, the co-founders to be leading the business, but we are very involved in terms of the functional support. So whether it's foundational things like fundraising, talent acquisition, but also around the technology, the product. So a lot of senior kind of experts, advisory, even people that can be staffed onto the teams. So I think that's very important, because the playbook for growth is not so written yet in Latin America, and we have a lot of knowledge from building, at this point, 10 companies in the region in the last years. So that's the next stage. And I would say after like the company raises a proper Series A, usually led by international investors, then I think, we're still very involved. We still sit on the board. I think we still have that co-founder relationship, but we are no longer heavily involved on a day-to-day basis with the venture anymore.
So really it's kind of following, as you mentioned, in a way, this 5-step process, right? Of ideation, conceptualization, commitment, validation, scaling, and then kind of on to the next.
Yeah, I mean, I think the part of our relationship that is so different is really in the first years, right? That first 18-month period of time is when the studio is the studio, right? And that has the 3 phases of ideation, validation, and product market fit. And then what we call acceleration is really making sure that getting to that initial product market fit, people don't go off the rails, right? So a lot of times you find product market fit and then you lose it. Sometimes you don't find the right, growth levers all the way through to get to that kind of growth, sustainable growth engine where an international VC is going to want to lead a Series A. So I think that second stage of support is also very important, because I think that's where a lot of people also fall. But we are no longer the ones running the business at that stage. And so it's also important for a studio to understand, when do you add the value and how do you add the value, and at what point you say, now you need to do this. I will still do this, but I won't do this other thing for you anymore, right? So I think that's a very important part of the healthy relationship that a studio needs to have with its ventures.
So really utilizing this venture studio / venture building model, what have really been some of your most successful startups to date, and how has it contributed to the overall growth in the region?
Well, I mean, we're still in our early days, in my view, but I'm playing a long game. So if you look at some of our ventures, they've definitely started to scale significantly. So one of the companies that actually just announced a Series A is called Wenyis, and Wenyis is a social commerce platform. And what it does, Latin America is very interesting in the sense that this is the region that is probably the most advanced and the most penetrated in terms of direct selling. So if you think about catalog sales, Avon ladies, I mean, this type of model, and it's not predatory. I mean, these are mostly not multi-level type of organizations. They're single level, but direct sales. And across Latin America, there's 11 million women that sell direct sales, right? But so there's a lot of social reasons behind that. People want to make additional income, so there's a lot of people selling. Other people want to, there's trust issues with traditional channels, and so people want to buy from friends and family. They also want to support friends and family. If I'm going to buy something anyway, I might as well help my friend rather than help the big retailer. So these are some of the reasons why direct selling has been huge in Latin America over many decades, right? And even countries that are not, of course, you have the Naturas of Brazil, and Brazil is a very big country, but even out of a country like Peru, you have at least a couple of multi-billion-dollar direct sales companies. And so that tells you the size. And what we're doing at Wenyis is we are essentially modernizing and digitizing that behavior. And so we're bringing on sellers to the Wenyis app, and instead of having access to a few hundred items, they have access to tens of thousands of items that they can sell. And with the Wenyis model, they do not have to take inventory risk, they don't have to take credit risk, because the product gets shipped directly to the buyer. And so they're really able to grow a bigger business and with less operational hassle and less investment in that business. So today, Wenyis has over 10,000 sellers. We grew 25 times last year. So the company is selling, multi-million on a monthly basis and growing still at significant double digits. So this, and the most comparable to Wenyis is actually a business in India called Mishu, and actually Mishu is an investor in Wenyis. And Mishu just, raised a round, valuing them at $2 billion from SoftBank, right? So Wenyis is going very well. We're well on our way to raising a Series B kind of within the next 12 months. And I think that is a model that proves, one, of course, all of this digital adoption that's happening around Latin America, but also kind of what we talk about at Polymath in terms of that spending power of the middle class and tapping into that, but making sure that we tap into it with a product that leverages their existing behavior, their existing trust. Because Wenyis, one of the beauties of the model is it has very, very low, almost inconsequential cost of acquisition compared to traditional e-commerce. And CAC has been a big issue for e-commerce in Latin America in previous years. Let's see how it evolves kind of post-COVID, right? But Wenyis model, because we're leveraging the seller to sell to their friends and family and beyond, we don't really have a CAC issue for the end user. So it solves one of the biggest pains related to e-commerce. The other thing is with the middle class or lower middle class, there's still low trust. And so that social selling really solves for many of the issues around, trust of actually adopting e-commerce. So it's a beautiful model, both from kind of the impact angle that we have in helping these women build, businesses. And the other aspect is it solves a lot of the business model and unit economics issues that people have had, especially selling towards the middle or lower middle class and for lower ticket items. So that's a company that's been doing phenomenally. As I said, 25x in a year is amazing. And, we'll probably do 10x, if not 15x this year.
So now I kind of want to take a step back and unpack this conversation a little bit. You had really alluded to this gender lens perspective quite a few times.
Mm-hmm.
And in Latin America, I think it's very different than other places in the world where, as you had kind of mentioned, females are seen as the head of the household. How has this kind of gender lens perspective played an overall role in the growing startup space?
So I think that, let me give you Polymath's perspective on this, and then I'll zoom out a bit onto the actual wider startup space, right? So because Polymath's thesis is around building companies that empower the middle class. So we're very human-centered design focused in the way we start the investigations. And because of the population that we are targeting, which is the middle class, which, if you include both the lower middle class and the middle class in Latin America, you're roughly talking about 50% of the population, right? So it's a very substantial part of the population, but they're historically very underserved. So in most Latin American countries, you have informal labor representing often 50% or more of the actual labor force. So that means that they are self-employed, they're running like a very informal little shop, right? They are not formally employed by a large company or even a medium-sized company. And so often it's almost like an entire other ecosystem where employment is solved within this ecosystem of middle class. Goods are sold in a very different way in very informal stores or through direct sales, and even services, right? So a lot of these people are underbanked at the very least, if not unbanked. And it's not because they don't have disposable income, because they're middle class. I mean, they have disposable income, but maybe they, might get their salaries or contracting payments via a bank account, but then they take it all out in cash and use cash for the remainder of the month. So there's an entire parallel universe that the middle class operates in. And I think this is very different than how you would think about the US or Europe. I mean, middle class is squarely within kind of the mainstream. And I'm not trying to define what is mainstream or what is not. I'm just saying this huge portion of the population has a parallel ecosystem that they operate in. And there's a lot of historical reasons for why this is the case, right? So we don't have enough time in this podcast to talk about all of the macro, micro, geopolitical, colonial reasons for why this is a whole separate universe to kind of the upper middle class or upper class in the way that they function. And so this is important context I want to give. And within this middle class context, in most countries, there is significant women as head of households, right? And so what this means, and this corresponds to some of the audience might know that, microfinance institutions around the world have tended to lend to women, and a lot of times women head of households, because they have significantly better payment behavior than men, right? And so this is also true in Latin America. And actually we have another business called Flore, which is modernizing microfinance, and doing very well, and actually one of the first, if not the first, fintech investment made recently by Women's World Banking, which is a very, very important kind of microfinance, mother of microfinance institutions around the world. And so that shows you kind of the potential they see in Aflore, in terms of how Aflore's model can modernize microfinance. But so this is a little bit of context in terms of like middle class, women as head of households in this middle class for a variety of reasons. I mean, a lot of them get pregnant quite young, and so it's, they have to be responsible very early on, and they work 1, 2, 3 jobs to make it work, right? And what we found is that in this alternative universe, especially these women they're hustlers, right? They are willing, like I said, to work 2, 3, 4 jobs, or 4 sources of income to build a better living for their kids mainly. And so that is one of the big drivers of direct sales. But also women are really social. They tend to, they build really strong trust networks and large networks. And so if you think about, digital business models and what you need, right? You need virality, you need kind of people referring you, you want to lower the CAC, you want to kind of have higher conversion rates. And so essentially having these women as the accelerator force in a lot of our companies, whether it's, Elena's in terms of selling products, Aflore in terms of helping us identify the right people to lend to. So we're finding over and over again that this population are kind of the right channels. And instead of building strictly B2C businesses, we are building a lot B2B2C. But that B in the middle is like a little b. So it's really kind of these micro entrepreneurs that are hustling. And it's a lot of times around these women. So that's a huge insight as Polymath that we have about the society and how we can leverage some of the characteristics of this society to help us, really accelerate digital adoption across products and services amongst the middle class. Now, zooming out a bit into and for us, it's very natural, because if you go in and study the population, you realize the kind of central role that these women play within this middle class segment of the population. And so it's very, very natural to start building for them. They control about 70% of household spend in these countries. So it's also like, go where the money is. So it's very natural for us. I think if you look at, the overall startup landscape, that is not true. And I think that's not true because I would say that there's a decent amount of Latin America's startup landscape that is still a bunch of copycat models from the US or Europe, which, obviously don't have that type of a lens. And there is still a very significant skew towards male entrepreneurs, globally, I would say, but especially in Latin America, because of traditional gender perceptions. So I don't think we're unique, but I think we are very skewed towards solving for women because of our very human-centered design-led methodology and our focus on the middle class.
So we really went from talking about these micro-level opportunities in Latin America to discussing these, the macro-level opportunities. And going off kind of this tangent, how is, the local VC industry evolving? Are you seeing more international VCs picking up interest in Latin America? If so, why?
Well, I think the VC landscape has been evolving quite a bit in the last years, right? So if you look at 2016, so 5 years ago, in 2016, the total dollars invested in venture capital in Latin America was $500 million. And you get to 2019, 2020, and it's well above, it's between 4 and 5 billion, both of those years. So that's very significant to basically do a 10x in terms of dollars invested over the course of 3-4 years. And that's really been driven by international money coming in. I mean, SoftBank is a big name. SoftBank basically announced a $5 billion LATAM focused fund in 2019 that they have been pretty aggressive in deploying, but they're not unique, right? You have Sequoia and Andreessen. I mean, many, not all, but many of the top US names in terms of venture capital have come to the region, right? And they started out very much in Brazil. So there was a decent amount of VC activity already going on in Brazil, and also some pretty significant kind of homegrown players like Hasek and Wenyis over in Brazil and Argentina quite a few years back. But I would say really the last couple of years, the amount of attention being paid to Spanish-speaking Latin America has grown significantly. So you start seeing, 25, $65 million Series A rounds being raised in Colombia and Mexico in the last few years, right? Which is like even really high numbers for the US for a Series A. And so, of course, those are the exception rather than the rule, but it's happening, whereas I'd never seen it before in years past. So the amount of, blue chip VC investors that from the US, especially, I would say, you also have some from Spain, but I would say blue chip US VC investors coming in is very substantial. So most people, even if they haven't announced deals yet, and sometimes they do a smaller deal just to test and they don't even announce it, but the number of people that are actively looking in Latin America from US VCs, from my perspective, has grown significantly. And I would even venture to say might be, maybe not a majority, but a significant minority of VCs are looking at deals in Latin America. Now, why is that the case? That is the case because Latin America, again, outside of China, and China has a very mature VC ecosystem at this point. Outside of China, Latin America is the largest middle class population region in the world that's left, right? And smartphone penetration is now at parity, basically, with China. So the latest figures I looked at, both were well above 60% in terms of penetration. So what that's telling you is everybody in the middle class has a smartphone. And really smartphone, kind of mobile access, and particularly smartphone penetration, was really what laid the foundations of the huge kind of acceleration of digital adoption and I would say leapfrogging in China. So I think these secular trends are things that investors pay attention to. Latin America has the exact same per capita GDP as China, right? So I think that those are the reasons that people are coming in. I also think that investors, what they're seeing in Latin America is that deals are still cheap compared to the US. The US market, as most people know, is very, crazy. The amount of money that's kind of available and the valuations, and it's very hot. And so I think especially some more rational decision makers in the VC ecosystem feel that they need to diversify not away from that, but at least add another region to and another set of potential deal flow to their pipeline. And so that's why you're seeing that not only the secular trends in Latin America, but also I think the fact that there are unicorns being built, right? Out of Brazil, out of Colombia, out of Mexico. You had a number of unicorns, a couple dozen unicorns that have been created over the last few years. And but valuations for early stage companies are still quite reasonable.
So throughout the call, you've really showed this comparison between China and Latin America. how does the blue versus red ocean concept play a role in this?
Right. So when I talk about blue ocean versus red ocean, blue ocean is this concept that came out of Harvard Business School around when you're doing business, what you want to do is innovate and innovate in a direction where you have a blue ocean open to you and not all these competitors competing away the margins and the profitability and kind of attractiveness of a market that should be big and interesting. So what you find in China is that because so much of the Chinese economy isn't fully private, there's a lot that are actually either owned or at least significantly intervened by the government. And so the parts that are very private, like the internet for a long time, they tended to attract a lot of very amazing talent and even capital, right? And so whenever there was an idea that came out, there would be not a handful of copies or a couple, like a dozen copies, but there would be hundreds of copycats at the same time, almost overnight. So it was a very like red ocean type of competitive landscape. Now there's been a lot of consolidation that's happened over the last years, and so you do have players that have emerged, and once they've consolidated, I think they have been able to get to interesting profitability, at least some of them. But that was the landscape in China. I think Latin America is an environment where there's a lot of demand. I mean, the market is great, right? For all the reasons I've cited. And I wouldn't say there's no competition, but it is not that there's not that many competitors. So even for businesses that business models that are well known, you'll have like one or two, pretty serious players per country, but it's not that you have dozens and hundreds of competitors overnight. So I think that's a pretty interesting dynamic where the market aspect is pretty strong, but the competitive landscape is quite open.
So to really wrap up our call with our last couple of questions for today, there was a time in your career, right, that between Milo.com and Polymath Ventures, you had this wonderful opportunity to get a dual degree at both Harvard and Stanford as a grad student. What ended up happening with that degree?
Right. So I went to Harvard. So I was supposed to do a dual degree between Harvard Kennedy School in development economics and Stanford Business School. And so I was interested in the development economics side because I didn't study much economics as an undergrad, right? Because I was more on the physics and philosophy side. And I felt that it was important for me to get some concepts. And I also had this interest in development economics. So it made sense. So I learned some economics. I learned a lot about how economists and development economists think about what's wrong and why, you can't close the middle income gap or you can't get out of this middle income trap in most countries. And so I think that was really interesting, gave me some theoretical basis for the work that I do today. But I ended up putting together a group of people for the summer between my first year out of the 3-year program to come to Colombia and do this pilot for Polymath. And it went super well. And I really enjoyed it. And so there was really no reason to stop. So I ended up dropping out of both degrees. I never even showed up at Stanford. And I think it was a great decision. Because I think when there's momentum and you're happy, and you should do that.
Really well said. And I think this perfectly kind of goes into our last and final question for the call today, right? What piece of advice would you give to people out there from the journey you've had so far in life?
So I would say a few things. The first one is really understand what you care about, right? And And I think there's very few people, when they have been reflective, who would say, what I really care about is money, or what I really care about is fame. I mean, maybe a few people fall into that category, but most people have things that they genuinely care about. And I think that, I think it's about understanding that, and understanding that that is what makes us interesting and fulfilled as human beings, and setting up your life to kind of spend more of your time on the things that you care about. I think the second one is just being courageous, right? I feel that that value, like being brave and being courageous, is not a value we talk about in modern society very much. Whereas I grew up reading a lot of Chinese epics about heroes and all this kind of stuff. And so that was really important to me growing up. And I think it still is. And I think that I've been able to do so many different things because I really haven't hesitated to just jump forward and understand, what if I just tried something? What's the worst that can happen? Or like this whole new world, or this whole new continent, or, a whole new discipline. So I think courage is not talked about enough and not practiced enough necessarily in our world. And then the third one is just like treat people well, right? We have been building in an incredibly challenging environment. I mean, now we can talk about how much venture dollars are coming into Latin America, but when I first showed up, there was very little of it. And people didn't understand when we talked about equity structures the way we did. They're like, why are you not paying me my market salary? I'm like, because I want to give you equity. And so we've been struggling through very, very, very tough circumstances and years. And I think we have survived and we have thrived because we genuinely treat people well, and we're honest, and we associate ourselves with the right people and with honest people. And so I think that's come back to benefit us in many ways, of talent coming back to the group after kind of going away for a few years, of investors that continue to invest with us, even if we've lost their money once or twice. And so I think the treating people well, that it's a long game, right, is something that I think is something that served me very well in life.
And Wenyi, for the listeners out there who are interested in potentially catching a cup of coffee with you post-COVID, of course, or maybe through Zoom, what would be the best point of contact?
Yeah, so I think that the best way is to probably find me on LinkedIn and contact me through LinkedIn, and as well as through email. So my email is just Wenyi at polymathb.com.
Wenyi, it was a pleasure having you on Geeks of the Valley, and thank you so much for joining us today.
Great. Thank you for the invite, and thank you for the conversation. I really enjoyed it.